Chris, it's good to see you. I have a question that's kind of on everybody's minds these days. Is the banking crisis over? I want to ask because I know that communicating with your clients is very important to you. So the Fed worked very quickly to stem the US banking crisis. So let's start with what's most important for your clients. What do they need to know?
Yeah, well, this is not the 2008 financial crisis, thankfully. We have the FDIC insurance that backs deposits up to $250,000, and they don't need to panic. It's easy to run into a panic situation. We are not looking at a situation where banks are failing in massive scale. So we are trying to calm our clients down. We can diversify. We use a lot of high quality insurance companies. We do, other types of investments, and anything that's in the banking side with our clients is below that $250,000 FDIC limit, so that they are all should feel very comfortable.
Okay, good to know. So you've mentioned though that $250,000 limit, which is the max amount that the FDIC will insure. What if I have more than $250,000 down the street in my local bank?
Yeah, and there's a lot to that as well, Aaron. So, if $200,000 is in an IRA account and $200,000 is in a non-IRA account, you actually get $250,000 on each of those types of accounts. Okay. So it's a little more complicated. But if you had $400,000, you just won the lottery, put it into a bank, you would probably be better off choosing a couple of banks to stay within below that threshold would be my advice.
Right. That's always a good idea. So you mentioned that you do not think that this is like the 2008 financial crisis. How do you see that as being different?
Yeah, Aaron, good question. The 2008 financial crisis was the fact that real estate values went down significantly, and a lot of those mortgages that people took got sold off to banks and to other, pension funds and whatnot. And when those real estate prices crashed, so did those assets, collateralized mortgage obligations and whatnot. Mm-hmm. It was an interest rate driven event that Silicon Valley Bank had tons of money in reserve. What they did with that money is bought U.S. government bonds. Okay. When the interest rate environment went up, if they had to sell those bonds, they were down in value because you could buy a higher rate paying bond with new money than what they were doing with their old money. So this was a really kind of an anomaly. And what the federal government did is came in and says, we'll buy those U.S. government bonds off of you at face value. That stopped the run on the bank and then bleeding cash, if you will. So again, it was just an interest rate driven event, not a housing crisis like we had in 2008.
Okay, thanks for explaining that. So again, this comes back to the first question. Is the crisis over? What is it that you, Chris, are watching or waiting for next?
Yeah, we are waiting for interest rates if they're going to increase. Does the economy get into a credit crunch? And do interest rate payments get too much where people can't pay those loans back? So, there's still a lot of things to pay attention to. But again, it's nothing that causes me to lose any sleep at night whatsoever. Silicon Valley Bank was, lent a lot of money to the tech companies. We're here in the Midwest. It's a little bit different feel, for what banks are doing right now. And I think they missed hedging the interest rate increase. The insurance companies we use put a hedge in case that happens because they buy lots of government bonds as well. And we have taken a lot of steps to mitigate all that risk. And that's why you don't put all your eggs in one basket, Aaron.
Right, exactly. I wish SVB had been listening to you, Chris. That would have helped a lot. So that being said, I think it makes sense if people feel anxious. So if they want to talk through these headlines with you, Chris, what's the best way to reach you?
Yeah, I would call Heidi at our office at 866-695-2620. 866-695-2620, and we can set up and have a nice 15-20 minute conversation and talk about some concerns and what are legitimate concerns and some that might be back burner concerns, if you will.
It's important to have that conversation. All right, Chris, thank you.
My pleasure, Aaron. Thanks, everybody.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.